Welcome to Wednesday's Market SITREP. Matt Buckley, call sign Whiz, portfolio manager here at Top Gun Options. Market's starting to catch a little bit of a bid today, but on conflicting data. Let's take a look at what happened on the flight schedule this morning. Saw some flat numbers out of inflation with core CPI and CPI. Also, our import-export balance looked pretty good. Our cap rate looked good. Industrial production looked good. And then here comes the bad news. Housing. National Association of Home Builders Housing Market Index came in weaker than expected. So those green shoots that everybody's pointing to, saying the housing recovery is powering us out of this great recession that we've been in, might not be true, right? So the market still kind of shrugging that off. Biggest news yesterday, obviously, was Facebook. Facebook starting to enter Google's backyard, and it's going to be interesting. At Top Gun Options, we trade the heck out of the four tech titans in Apple, Amazon, Google, and Facebook war. And we're doing extremely well at it, having a really good time. Also, a lot of good news out of banks today. Goldman Sachs reported earnings. Good article in the Wall Street Journal today about Morgan Stanley actually cutting up bonus payments to a lot of their heavies and deferring compensation, trying to keep people on board a lot longer. But more importantly, to try and avoid taking unnecessary risks. So financial sector starting to show a little bit of health, which is obviously a good thing. Things are going well here in our model portfolio. Top Gun Options up about $13,000, almost $1,000 per trading day that we've seen here in January. So having a good time here. Market's not approaching. We've actually exceeded 5-year highs on the S&P, folks. So we're staring at pre-financial tsunami highs on the market. Can it power higher? We'll see. As I've discussed several times in live trading throughout the week, I believe we're going to be in a holding pattern. I think earnings, fourth quarter earnings, are going to be a little bit suppressed because of fiscal cliff concerns, but I really don't see the market rallying too much in light of what's coming down the road, and obviously that's the debt ceiling debate come mid-February to the end of February there. So obviously Republicans wanting to potentially make this a showdown over spending, and of course the president having none of that. So it's going to be interesting. In my opinion, I think we're going to see volatility increase leading up to that fight, see the market pull back a little bit. And then once we get resolution, kind of like what we saw around New Year's with the whole fiscal cliff, we're going to see that rip-your-face-off rally continue. So we have a lot of positions here at Top Gun Options that are set up to take advantage of that. Okay, got to run, got to get ready for some live trading. I'm actually up here in Nashville doing an event for Satel at the Opryland at the Gaylord here. So got to get ready for that event as well, and some live trading later in the day. So I'll be back tomorrow with another sit rep. Happy hunting. Make sure you hedge.